Welcome to the Deep Dive, your shortcut to being well-informed. We take a stack of articles, research notes, you name it, and pull out the key insights just for you. Today we're diving deep into the recent Q2 2025 earnings from CME Group, the world's leading derivatives marketplace. Our sources for this one, well, we've got their second quarter earnings call transcript and the official news release right here. And our mission basically is to unpack what these record-breaking numbers really mean. We want to understand the forces driving them and maybe explore some of the surprising trends shaping global markets. Should be some real insights here.
Exactly. And what's really fascinating, I think, is that these aren't just, dry financial figures. They're actually a profound reflection of these fundamental shifts in how risk is managed globally. It gives you a really insightful look at the current economic, geopolitical dynamics, like looking right at the market's pulse.
Okay, all right, let's unpack this then. Starting with the big picture, because CME Group just reported, well, all-time record performance for Q2 2025. It was, frankly, a remarkable quarter. Let's get into some of those headline figures. They reported record revenue of $1.7 billion, which is a significant 10% jump from Q2 2024.
Yeah, 10%. That's substantial.
Right. And their adjusted operating income also hit a record, $1.2 billion. That's up 14% year over year. And they kept a really strong 71% adjusted operating margin.
Wow, 71%. Okay.
Yeah. And we're talking record adjusted net income, $1.1 billion, and adjusted diluted EPS earnings per share hitting $2.96. Both of those up 16%.
15%, yeah.
Even their clearing and transaction fees, another record, $1.4 billion, up 11%. Average rate per contract, 69 cents.
69 cents, okay.
And as if that wasn't enough, market data revenue also hit a record, $198 million. That's up 13%.
Right. And what's genuinely striking about all these impressive financial records is how they link directly to something even more foundational. That's the record average daily volume, or ADV.
Ah, the volume, yeah.
Exactly. For the first time ever, their ADV actually went over 30 million contracts for the quarter, hit 30.2 million.
30.2 million. Wow.
Yeah, that's a 16% increase from Q2 last year, and they actually hit all-time records in each month of the quarter. So it's not just about more money, it's this incredible level of market activity, client engagement.
That's a great point. And these aren't isolated wins, which I think is important to stress. This is their second consecutive quarter of record financials, and that follows 3 straight years of record annual earnings.
Right.
So it really suggests a sustained sort of structural pattern of growth here.
Definitely looks that way.
But the real question is why? I mean, what does this all mean? Why are clients turning to CME Group in such huge numbers, driving this immense volume?
Well, if you zoom out a bit, this incredible activity really reflects a growing, almost urgent need for risk management globally. Yeah. We're living in an environment with, heightened headline risk, lots of macro uncertainties, wouldn't you say?
Absolutely. Every day, it seems.
Yeah, think about the geopolitical stuff. Russia, Ukraine, Israel, Palestine. Plus, you've got these record levels of government debt, U.S., U.K., Europe. All of this just creates this huge demand for CME's products because they're seen as transparent, capital-efficient, cleared benchmark products. Institutions need reliable ways to manage all this complex risk.
And the volume growth itself was really broad-based, which I found particularly telling. We're talking year-over-year growth in all 6 asset classes, every single one.
All 6, yeah.
They even saw all-time quarterly volume records in interest rates, ag commodities, and metals. Financial products volume grew 17%. Commodity sector volume grew 15%.
Okay.
Yeah, and they describe it as still being a risk-on environment. You can see that in the 7% growth in open interest from Q2 last year, and that's 10% up from the end of 2024, plus new records in interest rates and crypto futures for large open interest holders.
And this broad growth, it also really highlights CME Group's deep integration into global markets, right, through their international business.
Ah, yeah, the global reach.
Exactly. Record international volume, 9.2 million contracts a day. That's up 18%.
18%.
Yeah, led by record EMA volume, Europe, Middle East, Africa, 6.7 million ADV, up 15%. And record APAC volume, Asia Pacific, 2.2 million ADV, up a huge 30%.
30% from APAC. Wow.
And this isn't just one area. It's coming from diverse asset classes, different customer segments across key regions. We're talking France, UK, Switzerland, UAE, Netherlands, Singapore, India, China. It really shows their global footprint. The need is everywhere.
Okay, but here's where for me at least, it gets really interesting, maybe a bit surprising too. The rise of the retail trader phenomenon, as they put it.
The retail side, yes.
In Q2, get this, over 90,000 new retail traders participated for the first time.
90,000 new.
90,000. That's a staggering 56% increase year over year.
56%. Wow.
Yeah. And this surge, it contributed to a record for their micro contracts ADV, 4.1 million contracts. Micro-E NASDAQ 100 futures alone were 1.7 million of that. You know, year-to-date, NASDAQ 100 futures and options volume is up over 2.5 million contracts a day. That's up 22%.
Okay.
And to really, cement this, CME Group announced a 10-year extension of their exclusive license for NASDAQ 100 futures and options right through 2039. Keeping the same economics.
A 10-year extension. That's a big commitment.
It is. Clearly signals a long-term strategic bet on this segment. But who are these new retail traders? Are they, different now?
That's a crucial question, actually. The evolution of retail traders is pretty significant. They seem far more sophisticated, more educated now than maybe in the past. They're often using simulation environments, better technology, before they even risk real money.
Right, practicing first. Makes sense.
Exactly. And while they often start with the microequity suite, those smaller contracts are more accessible, right? CME is seeing really impressive cross-selling into other products, like retail gold trading was up 37%.
37%.
Micro Bitcoin up 94%. And Micro Ether saw this massive 212% increase.
Whoa, 212 on Ether.
Right, yeah. So it tells us they're not just dabbling, they're expanding their knowledge, getting into different asset classes. And CME's focus on education and client retention is really key here. They did 100 client events just in Q2. They work with 85 external educators in 13 languages.
13 languages. That's serious outreach.
It is. It's also worth noting, though, that while international business tends to have a higher RPC rate per contract, these retail micro contracts can sort of pull the average down a bit.
Okay.
So the real focus is on the sheer volume and the overall revenue growth from this, expanding, more engaged retail base.
That makes sense. A really powerful shift in that retail landscape. Okay, so beyond the impressive numbers and the current market drivers, what's really shaping CME's longer-term path seems to be their strategic bets on innovation, efficiency. What does that future look like from their perspective?
Well, one big area is the crypto ecosystem. CME, they sort of see themselves as a fast follower there. Their main role is providing a regulated platform for crypto. And that gives confidence, right, to the more mainstream financial players who might be a bit hesitant otherwise.
Right, the regulated wrapper is key.
Exactly. And the momentum in their crypto complex is strong. 190,000 contracts traded, up over 130% year over year.
130%.
Yeah, and that momentum carried into July. Nearly 260,000 contracts per day. That represents over $12 billion in notional value. Pretty significant.
That is significant. What about perpetual futures? We hear about those.
Perpetuals. Yeah, it's important to understand those are currently illegal in the U.S. They exist in Europe, but not here.
Okay.
And, deliverable products like energy or rates, they aren't really conducive to perpetuals. But cash-settled ones, like crypto, well, they could be. It really all comes down to regulations, how that evolves, and whether we'd ever see them allowed in the U.S.
Got it. So with all this growth, I imagine capital deployment, expense management, those are key things they're watching. How are they balancing rewarding shareholders with, investing for the future, especially when, as you mentioned, inorganic growth looks tough in this space?
Yeah, their approach to capital deployment hasn't really changed much. It's still opportunistic for buybacks, and that complements their variable dividend structure.
Okay.
On the inorganic side, like acquisitions, yeah, it's challenging. There just aren't that many suitable targets in the exchange world. So CME tends to look more towards joint ventures like their partnerships with S&P Dow Jones, Google Cloud.
Right, the collaboration.
Exactly. And commercial agreements like that NASDAQ license extension we talked about. Those are alternative growth drivers for them. And interestingly, they also managed an expense guidance takedown. They actually reduced their prior guidance by $15 million.
Oh, okay. How'd they manage that?
Well, it seems it was mainly from optimizing spending on the Google migration project and just relying less on external professional services. So it shows they're keeping an eye on operational efficiency, even while growing fast.
Good. Discipline. Okay, let's talk buzzwords. Stablecoins, tokenization. We hear these all the time. Is CME actively playing in these areas? And if so, how?
Absolutely. The main focus here seems to be that partnership they have with Google Cloud on something called a Universal Ledger Partnership Initiative.
Universal ledger. Oh, yeah.
Yeah, the goal, and it's ambitious, is to enable 24/7 movement of value.
Uh-huh.
And they plan to do this by tokenizing cash and other non-cash assets within their current ecosystem.
Ah, within the existing system, not necessarily clearing new stuff right away.
Exactly. Initially, it's about integrating it into their existing processes. They're currently in the second phase of testing this with settlement banks, and that will eventually extend out to clearing members and clients. They sound very optimistic about our ability to bring to market a solution in 2026.
2026, okay, that's relatively soon.
It is. And the critical word here really is efficiency. It's all about increasing value for clients by making processes faster, smoother, especially for those crucial risk management needs.
Makes sense. Efficiency is key. So what about specific market innovations? What's driving changes and efficiencies within their sort of existing offerings right now?
Yeah, there are a few key areas that really stand out from the call. First, FX Spot Plus,
Okay.
launched in April. It's designed to combine the spot and futures foreign exchange markets. It's already hit $2.7 billion in single-day volume. It's pretty impressive for something so new.
Yeah, definitely.
Nearly 50 entities, including dozens of new banks, have actively traded on it. So it seems successful in bringing in new participants and improving market quality there.
Good start. What else?
Second, their cash treasury trading platform, BrokerTech, had an exceptional Q2. Average daily notional volume of $949 billion.
Almost $1 trillion a day.
Almost, yeah. Up 24%. And they're launching BrokerTech Chicago, which is a second matching engine, on September 15th. That's expected to help with new client acquisition, especially for those trading in sharper tick increments, very precise price moves.
Okay.
BrokerTech also had a strong repo offering repurchase agreements, key for short-term borrowing record, $362.9 billion ADV. And RV Curve, their short-term interest rate product, hit its second straight record quarter at $2.7 billion. So BrokerTech is firing on all cylinders.
Sounds like it. Anything on the regulatory front impacting them? Bank capital?
Yeah, they touched on bank capital requirements, specifically potential SLR relief. That's the supplementary leverage ratio, a key bank capital rule.
Right.
CME sees any potential relief there as a net positive for banks. If those rules get eased, it could give banks more balance sheet flexibility.
Yeah.
And that could potentially free up capital for risk management activities, which might flow back to CME. Though, the actual impact depends on the final rule and what individual banks do.
Sure, depends on the details.
Right. And finally, their collateral balances. They reflect continued liquidity despite volatility. Average total collateral posted went up significantly from Q1 to Q2, hit $316 billion. That was $133 billion in cash, $145 billion non-cash. The cash portion was nearly 48% of the required amount.
Okay.
Which is well above the 30% sort of soft minimum they introduced in April. Shows there's still robust liquidity out there.
Got it. So with all this talk about 247 value movement and crypto being round the clock, how does CME Group view the bigger push towards truly 247 trading across all asset classes? Is that just inevitable?
Well, looking at the wider picture, their view seems to be that 2047 trading will eventually happen globally. But the timing, is it 2 years, 10 years, 20 years, and which asset classes? That's all still pretty uncertain.
Okay, not a done deal yet.
No, they're a significant hurdle. Think about the costs for firms to staff up for continuous operations. That's huge. And also the regulatory views from central banks, especially for really critical markets like interest rates and FX. They'd have a say.
Makes sense.
However, you're right about crypto. That market is largely there today. It's the asset class that's, as they put it, already basically there today for continuous trading.
Okay. So this has been a really thorough deep dive. CME Group's record quarter, it really emphasizes how it's not just about, the impressive financials. It feels like a window into these profound global shifts, how risk is seen and managed, the incredible pace of market tech, and the surprising expansion of who's participating, especially that more sophisticated retail trader.
Exactly. It really illustrates the central role that things like transparency, capital efficiency, and just adaptability play in navigating today's, let's face it, complex and volatile financial landscape. These are the core principles driving growth and evolution in global markets. And that's why CME's performance, I think, reflects something much bigger than just their own bottom line.
Absolutely. So as you, our listener, reflect on all this, maybe consider this, given this increasing need for global risk management in a pretty volatile world, combined with the explosive growth of these more sophisticated retail traders and the continuous innovation in market technology, how do you think these trends will fundamentally reshape the way individuals and institutions interact with financial markets in the coming decades? Something to think about.